We had a large pullback yesterday. Today was a bit of a consolidation day. Those usually tend to be either bullish if the move is up and then you have an inside day, or bearish like today if you've had a big move down and then you're kind of just hanging out inside. So technically today was just a consolidation day. Prices accepted lower. There are some caveats inside of that, like some of these bigger stocks that kind of showed there was a lot of topping tail action yesterday, like stocks and look above and fail action, meaning there's a range, the stock looked above the range and failed, and usually when you have a look above and fail, you rotate to the lower end of that range. We had the exact same thing actually happen in the ES, and I had discussed that in the weekend review a bit, and I think my commentary of late has been a little bit more negative than most. I'm never afraid to be negative when I think prices are going lower, and I had mentioned that I did think that we would be seeing a potential 50 MA test this week, and we're pretty close. We'll get more to where I think that the market could see or might not see in a moment. Let's talk quickly about what's happening here with regard to the political backdrop, the reason why the markets are down. For me, it's a technical move. A lot of people like to put a lot of weight on why things happen. I don't really focus so much on the why as I do the what. And the reason I can say is that on Thursday in the overnight session, the market had a look above and fail of the Fed day range and then has been pulling back since. Usually when you look above a range and fail, there is a rotation to the lower end of the range. We had that happen the following, 1, 2, 3 sessions. There was a bit of a bounce, and then yesterday you had this big down move. So I believe that the move was largely technical. If you want to pin it on some, macro events, I could give you a few. I'll get to that in a moment. I'll just make a little quick note here so I don't forget it. But I believe it was mostly technical. I think it was also part of a condition, an overbought condition that was sort of holding out to correct itself until the big quarterly options expiration. And after that occurred, there was an ability for the market to correct a bit. When things run up a lot, or pull down a lot, there are often periods of retracement. I wouldn't say that there is any major technical damage done to the market at this point. The downturn, there are some signs of toppiness in individual names and maybe even a little bit in the overall tape, but there's no major technical damage that the market couldn't recover from at this point. That being said, let's discuss a few things. Let's talk about the macro events that may be causing the market to pull back that we hear about on TV all day. And I want to bring a little bit of order to chaos in that capacity. So first and foremost, there's concern that President Trump's agenda might not go through as quickly as the market was anticipating. I like to equate the market to a crack addict, or a heroin addict would be a little bit better. I've done a lot of actual it's interesting. If I had to redo college again, I think I would have taken, instead of double majoring in finance and marketing, I would have double majored in both finance and psychology, because psychology is really what this all comes down to. And the market likes to have instant gratification. If it doesn't get its fix, it gets moody and it throws tantrums. So we know that the market has been rallying on a few pillars. One has been deregulation, tax reform, repatriation, and infrastructure. Those are the 4 legs to the Trump rally, as well as an overall feel of more business-friendly environment, which is a huge change from what we've had the last 8 years. So the fear now is that the Republican bill to replace Obamacare, the American Health Care Act, may not pass the House tomorrow, and that either delay or vote down would cause a delay in the agenda, the overall Trump agenda. There's been a lot of distractions with hearings with FBI Director Comey about, alleged Russia ties, which I really think are complete nonsense, but that's a whole other story. But this is what's going on, and this is what the market is upset about. In addition, my view, by the way, just so you know, I thought, and I was maybe the only one who thought Brexit was a positive for the market. Yes, there was the initial move down, but I'm time-stamped on Twitter, forever immortalized, saying it was a buying opportunity. I'm also forever immortalized for saying that I thought the market wanted Trump to win and that it would go up if he won. And I thought he would win. Everyone knows this. I've said it in videos, I've said it in tweets, and that turned out to be correct. It was considered lunacy at the time. Here's another piece of lunacy for you that will, I believe, turn out to be correct. We just had a big election in the Netherlands. They decided to stick with their status quo candidate and not go with their pro-growth candidate, and I don't think the market likes that. I know all the geniuses on television are saying that the market was relieved. It's been going down since. The market likes growth. It doesn't like debt, dependency, and entitlements. It likes entrepreneurship and business-friendly policy. So that is a negative on the market. Exactly what the TV guys and gals tell you is positive is negative. Also, there are new polls that say the French opposition candidate, Marine Le Pen, is a little less likely to win. I don't think the market likes that. The same people who told you Trump and Brexit were going to be terrible are also telling you Le Pen is terrible. I'm telling you the opposite. These are pro-growth candidates, and I realize they're not politically correct and they offend a lot of the elite intelligentsia, but the market likes these candidates, and I think that that's been proven out time and time again, and any chink in that armor, I think the market is reacting poorly to. So you heard it here. Anyway, we're going to get the vote tomorrow. I don't know how long most of you have been trading. I've been doing it probably, it's scary how long I've been trading, actually. I used to trade when I was in my teens, so now we're well over 20 years in here, which is kind of freaking me out, but it is what it is. I've seen a heck of a lot of stuff go down in the market, and I'll say this. The setup here is what's key. And I think that we're going to move off of these events until we get into earnings season. The market tends to trade either on earnings or headlines, and that is what kind of kicks the ball around in the market. So let's discuss some of these technicals. I mean, I don't want to get into too much of the details of the Healthcare Act, but I do want to clear a couple of quick things up. The Republican opposition to the healthcare bill isn't that they don't want it. It's that they don't like the three-part process to it, the phase-ins, because those have to be voted on later, and they probably won't get through with all this resist and stuff through the Democrats. I can't see the Republicans picking off that many votes. And I think the push is from this Freedom Caucus is to get rid of what's known as the Byrd rule so that they can do it all at once. So that's kind of what the debate is, not over whether or not to do the bill, it's how to do it, whether it's all at once, which I'm frankly in favor of, the stuff that everyone thinks is, again, the lunacy I view is the correct way. You do it correctly first. Or, so I do side on this issue. I'm with the Freedom Caucus on that. I think it should be done all at once, up front, get rid of the state lines, get the competition going. But I will say this, I mean, whatever gets through the House is going to be chopped up and brought into conference after the Senate. It's not going to look the same, so it's not going to make that much of a difference. We got way, way too into details that I didn't want to discuss here, and I'm going to just leave it at that. So I do think eventually, I don't know if it's going to happen Thursday, something will get through. Remember the first vote on the TARP bill, which the market threw a hissy fit on, I think it was like a down 700 day. I don't equate this to that, by the way. It's not even close in terms of severity. But I do think that if this doesn't go through tomorrow, the junky market or the petulant. Think about the market like this. Whenever you are wondering how it's going to behave, think of it as a petulant child in the back seat of a car asking, "Are we there yet? Are we there yet?" That's what's going on here. It doesn't have the best temperament for disappointment, and if the bill doesn't go through as is tomorrow, I've just told you I don't think it's the end of the world, but the market will not like it, and there would be a move lower. There's diverging indicators here. I've been watching this, what is it, KND. That's sort of been my proxy for this whole healthcare thing. This Kinder, where is it? Unbelievable. KND, yeah. They had pretty good earnings. I actually thought the stock was starting to look a little bit bullish, but it's been pulling back quite a bit, and it stopped oddly strongly on the gap fill in the 50 MA. So I actually like a row long against this 50-100 MA confluence here, but that is what I've been using as the proxy, and that's been getting smacked, and that to me would tell me that the bill will go through. However, if it doesn't, this will probably take off and rally a little bit longer, and that is my take on that. So you're getting a little bit of conflicting. Hospital stocks are getting smacked, which should tell us that the bill will pass, but the market has also been getting hit, which tells us we might not. Let's pepper in a little bit more here. You now have a Federal Reserve that raised interest rates, and the whole theory has been on back-end growth that's coming in. If you go back to my sayings in my videos, and I'm trying to spend a little time on this. I know it's not, whether I think this stock is going up or down, but I think this backdrop context is so important because you're fed crap all day long on the boob tube from people who don't really know what they're talking about. So I'm trying to clarify that, bringing order to chaos here. And I don't have I'm not looking to get advertisers, and I don't need to have everyone in a perpetual state of fear, although I will say that my view rate goes up on my videos when the market goes down. Everyone's a genius when it's going up, but when it comes down, everyone, they need their hand held a little bit. Listen, I could use a hand holding once in a while too. Anyway, so here's the story. The fear now with the Fed is that they're going to be in a cycle of multiple rate hikes. I've said that will not be the case. I stick by that, even with their hike. Her commentary, I know we want to go back and be revisionist historians there. It was not hawkish. It was quite dovish, actually. And I believe I need to pull this up quickly here on the fly. I wasn't planning on even discussing this, but that's kind of how dynamic I can be at times. Now they're asking for subscription. Unbelievable. I'm talking about what the probability is of rate hikes going forward into the end of the year, and all of them, from what I'm seeing now, I'm just kind of scrolling through them. I'm out into November, December. They're all under 50%. So the market now thinks that there either won't be another hike into the end of the year, or that there might just be one other. I've been of the impression that, I'm sorry, someone just used some racial terms and they're about to be blocked. They just were. Please don't use profanity or racial slurs in my video in my chat room, or you will be blocked permanently. Sorry for that distraction. Anyway, where were we? I got distracted by that. The Fed. I don't think that they're going to hike three more times. I think that they might do two. 1 to 2 is my gauge, because I've been saying I thought 2 to 3 this year, and I didn't think that the stuff that President Trump wanted to get done. I do think it will get done, but I didn't think it was going to be as fast as the market may have thought. Things always seem to take a little bit longer. This is Washington, and draining the swamp ain't so easy. President Trump is there to is got his work cut out for him. Anyway, let's get into the market and technicals and what I see is going on, because I am here to chew bubblegum and kick some ass, and I'm fresh out of bubblegum. And if you know what movie that came from, You are definitely a fan of mine. I'll give a little hint. It has a WWF reference, but it wasn't a WWF event. Anyway, for those initiated. So let's talk about what's happening here. I've said for a while, and I mentioned that I'm going to start at the bonds because that's really the Fed, is the bonds and the dollar. So I said that I thought that the Fed day would be the low. You had the gap up, it's held, and now we're back into range, and it sort of has a spinning top doji here at the 100 MA, and it's pretty close to the gap fill. We had a look below range. Remember I said a look below range, and I thought we'd articulate back to the upside here. And we are now testing the backside of the old uptrend and getting closer to the top of the range. So there might be a little bit more up in the bonds here, but it's probably not as good of a buy as it was a little bit lower. That's just my take on the bonds. If you want to own it here, you want to see it clear this like 100 MA and hold the 50 MA. I'm not really seeing the 50 MA as being like super duper significant, but I would be a buyer on dips as long as it kind of can make higher lows and higher highs. So I'm a buyer of dips a little bit. As far as the probability, and I keep getting asked this, are we going into recession? Wall Street, I think, is famous for picking the last 11 out of 7 recessions. They always think we're going into recession. Watch the HYG and the JNK. Those are the ETFs that show high yield. I had said that I thought we would get a 200 MA test, then a strong rally back to the 50, which we did. And then I wasn't sure, I said, if we were going to keep rallying or more likely a pullback, and that has happened. So we now have a pretty solid kind of close double bottom, a little higher low today, with a hold now twice of the 200 MA. If we were to lose the low of day of today and the one from a few sessions ago, the 314, I don't think the 50% fib would catch it, but I do think the 61.8 would catch it down in the 85s. Maybe we have a move back down into the 84s. I'm not of the opinion, though, that we are going into a credit crisis. I don't think that that is on the table at the moment. If my view of that changes, I will let you know. I'll have my people call your people. I'll send you an action item memo. How's that? One of the things I'm watching for that, and the last time we had this issue was with oil. Take a look at the oil chart. Take a look at HYG. They are trading fairly in tandem. I don't necessarily know if that is correct anymore, but it is what it is, and it will be until it doesn't work anymore. Traders do what works until it doesn't. You now have a 2-day double bottom basically in oil with a slight look below and fail today with a hammer. If you were to lose the double bottom, I think we would see 45s and maybe 44 pretty quickly, because that would be doubling the range down. Remember, I had talked about the range that oil was in between 49.61 and 55.24, and if you double the range lower, it's 43.98, so I'm just saying 44 because it's close enough for government work. It's a slight look, it would be a look below the, it would be a move below, the 61.8 of the range. The 61.8 is roughly 45.22, so I think that area with maybe 42 is sort of like the outside possibility. If we were to hold today's low and get back up above the high tomorrow, which is 48.32, and then clear 49.71, I would say that the breakdown is very suspect to me, and I think we would get probably back to at least 51.52. So that's the scoop. Oil broke down. It got the 61.8 of the smaller range, rallied. Now we're back here again. We didn't quite get the channel low. I was sort of hoping for this to get cascadey right to the channel low, but I said I thought that 61.8 area would hold, so that turned out to be actually correct. I don't know if I would put as much stock into the channel low as I might have if it came at it without that initial bounce, and considering it would be below the 2-time low. The rally did stall at the breakdown point, so you now need to clear that high, which was 49.71. So 49.71-ish needs to be cleared. If that is, the breakdown in oil will be false. If you get below today's low, I think it will get a little cascadey to the downside, and that might get some credit fears going. I don't necessarily know if that is going to be correct, but that, and whether I agree with it or not, which I don't this time, I did the last time, doesn't matter. It is what it is. Just remember that. Doesn't matter what you think. It doesn't matter what you think should be or what you know. It matters what the market thinks. And I am very good at separating that. So that's my view on the debt and oil, the high yield credit and oil. I'm going to skip JNK because I don't think it's basically kind of the same story. So what's going on with the banks here? That's been a very key part of the rally. And my take is this: they just ran a hell of a lot. I've said for a while, and I changed it. I wouldn't say recently. It was right after the rally got started, so it wasn't like the dead start, but it was pretty early on. The banks are going to be back, in my view. I used to say if you want to buy financials, buy insurance companies, because they have two things going for them. They don't have as much credit exposure as far as the banks go. They tend to be conservative in that regard, and they would have a tailwind at their back because interest rates should be rising in their favor, and they make a lot of money. They have great businesses. Insurance business is a fantastic business. But now, I think a lot of the money that hit out in these sort of wannabe financials just to have sector exposure is now flooding back into the banks, and it did it all at once. Now, though, there's the kind of the fear that the Fed won't be hiking as aggressively, which I never thought that they would, and that the deregulation might be delayed. So what does this mean? It just means that they're going to pull back. Are they going to collapse and go all the way down? I don't think so. I think that they're going to be buys on the pullback. But there are some caveats here. One, it may be too early to buy the bank. The 50 MA has been what's been holding it, and it tore through it yesterday like a knife through butter. I showed in the weekend review a kind of either a fat finger or a bad tick that took XLF down to 22. I get a little superstitious when I see these things, and I think they'd like to get retested. Someone else besides me saw it, an algorithm or two cached it, and they tend to like to be retested. That being said, with regard to XLF, it is now held the 100 MA. I think you can use today's range for a write or write out trade, particularly tomorrow. You can either be short below the low or long above the high. I would assume for a quick trade back to the 50 MA. To really firm and for me to say, let's go buy the banks again, I need to see one of two things. One, I needed to get back over the 50 MA and hold, or I need to see it lower. How much lower? I would think the first and foremost, the range low would be 22.85. We had the look above range that failed, and it may overshoot lower. There could be the 200 MA. I mean, all the way down would be a move to kind of retrace the entire run, which would be basically down to trend where it broke out around in the 2021 area. I don't know, and I can't say that I think that that's going to happen. I would be an interested buyer if we kind of got down that low, though. So yeah, that's my take. We either need to go lower and see some type of a reversal pattern into a technical support, or we need to get back and firm over the 50 MA, and I'm not going to mince words. That's what I need to say, and I will. If we do go lower, I will let you know when I think it's low enough. But if we were to get back up over the 50 quickly, and if you look at, like, let's say JP Morgan, which is sort of the poster boy, they're the best of the banks. Oddly enough, JP Morgan could even be setting up for a Head and Shoulders, but we'll discuss that in a minute. It needs to get over the 50. Yesterday broke the kind of mini up channel higher, which I will show in my weekend review video. And it stalled today just below the 50 MA. So you need to clear that 50 MA, or I think at the very least it could see 83s and maybe even as low as 78s, which is sort of where it, I shouldn't say only 78.92 to 80.44. If it were to get that low, straight, I'd be interested in selling near dated out of the money puts. If we were to have that breakdown, I did a 2 times range area, 77.88, so roughly around there, in that like 78 range, I think would really be some solid support, at least near dated. The Head and Shoulders potential setup I would detail in the weekend review video because you kind of need to visualize it, and I can't say that it's setting up. We're nowhere near where that thing would, we haven't even formed a right shoulder yet, so this is just pure speculation, but I will do that speculation in the weekend review video. So something to look forward to on Sunday. Let's get into the dollar quickly, because listen, if you notice, I'm talking macro because when the market moves up, the correlations tend to break a little bit. You have what I call an actualizer market, meaning this like market of self-discovery where everyone's a genius and they know how businesses are doing and the business models are doing well, and this is going on. Someone asked, what am I lying about? I'm telling everyone how I see it is, so you tell me. Anyway, we're not in that. Obviously, when the market goes up, you're sort of in the actualizer market, and when you go down, you're in the fearful phase where correlations move closer to 1. That was sort of that's my theory of why I'm focusing more on macro in this video. The dollar. So the dollar, I had proposed a while back the Head and Shoulder setup. If you watch my weekend review video, I show it. We're actually very close here to the neckline. I wouldn't be surprised to see some type of a bounce here. Oddly, if you look at UUP, and I will again detail this in the weekend review video, it held the breakout the last go round. Now we're coming to it from a lower high. And it's straight down. I don't know that it's going to fully snap here, and I would be actually suspicious of chasing the short here if it doesn't have a bit of a bounce first. I do think that the 200 MA could be in play. That's really was very critical for it to break out. It should be retested. But the dollar is showing a lot of toppiness. And I do think it's possible that there is the right-hand articulation lower, and this could even come retraced on the UUP, even as far down as to 25. So I will go over this one more time in the weekend video. What I'd like to see here would be that breakdown of the neckline, then the check back to the neckline, and then a resumption lower. That tends to be, in my experience, the easier play rather than shorting the initial breakdown. Although, listen, anything in my view on UUP below 25.65 and 25.68 was really the breakout, to me is showing weakness. Why is the dollar weakening with the Fed even getting stronger? Is because I think that with the Fed getting more hawkish, because I don't think the Fed is getting that hawkish. I think that they've openly said they don't want a strong dollar. You've had President Trump say he doesn't want a strong dollar, and the same thing with Mnuchin. If they're going to start having these like trade wars with China, they're going to be looking to devalue the dollar, frankly. They're not going to be looking to hike it. So that's my view on that. If that were to change and there was pattern failure, I will discuss that. A couple of early signs why, if you remember back, why I was bullish on the market are setting up here. IYT, the transports, this was very early. Transports in copper, if you go back and you look at my feed, when everyone was bearish and I said we were getting ready for launch time, I said you're not in a bearish market until you start seeing the transports and copper breaking down, and they were running. They were already running. The transports here are potentially now also setting up for a Head and Shoulders top. The key level in my view here was the range low 161.58. Yesterday we closed below there. Today we got back up above with a bit of a look below and fail. We also held trend, so technically this is all good in the hood. Anything, though, below the 50 MA, I'm a little bit iffy about, and I will show this in the weekend video, that there is now a potential rally coming, considering FedEx was a move down in after hours and then closed up. We may see a rally in the transports, and I know people are, from my messaging, that people are jonesing to buy the airlines. I like the airlines too, but lower. If there were to be the articulation lower in the IYT, it could even go as low as 145.58, where I would be actually a very interested buyer down in that area, but that's neither here nor there for a little while. I do think that before this does get any really official breakdown, we would need a move up first. So I do think that this could be setting up bearish, but kind of not yet. It's sort of like St. Augustine. Give me chastity and give me stability, is it? But don't give it yet. So this could potentially have an issue coming, but not yet. So copper. Let's talk Dr. Copper. Similar chart, consolidating in a triangle. This again, don't worry, will be shown in the weekend review video. I got to figure out some software where I can do these, where I show myself and also show the video. If anyone has any recommendations on software that's not like a super fortune where I can do this, send it to me in my DM on Twitter. My handle is @JustinPulitzer. I have a couple I'm looking at, but they're a little pricey, and I'd like to look at the reviews first. Anyway, this is bouncing a bit. I think the triangle is going to be a go with. So basically, if you're not seeing this, just on HG, over 270 is a long, below 255.85 is a short. And I think it would be an articulation back up to the old high, or one back down to the recent low, which would be probably at the time closer to the 200 MA. So that's my view. Again, these are some early kind of potential warning signs, but nothing is really broken yet. And if anything, some of these are due for some bounces before they would really go lower. Let's talk about some of the stocks you boys and girls wanted to talk about, and then we will be Audi 5000. So let's just blow through these quickly. One thing I was watching was the bears. If they could take Apple out, that is a key stock to the rally. It was early leader, and now it kind of had a look above and fail yesterday, but today firmed up really nicely. That to me is a little telling. I think you basically have 2-day lows in Apple. The low yesterday was 139.73, and today was 139.76. If you're looking short, just put a sell stop or whatever below those 2-day lows and have a write or write out. That's my play for Apple if you're looking short below the 2-day lows. If it gets back up above the high, it's just going to be game on, and it could probably go maybe even as high as 162.39, which is the 1.618 Fibonacci extension. If it were to soften and break, and you really need to see the 20 MA break to get this like crazy bearish, but I do think for our trade, you could put a short below the 2-day low for two reasons. One is that you would now have a look above and fail, a bounce to a lower high and a potential secure high, and if you take that low, it I think would get down maybe to as much as 133s, 134s. I actually might enter that order right now as soon as I finish this broadcast. Anyway, I like that as a play. If you take the high, though, it still goes, but that would be a decent write or write out entry to my eye. Amazon, I had been talked about this. I said that I thought this was going to go higher, and it did, but it reversed rather abruptly yesterday, and I talked about it when it was basically flat, and then after that, the thing got absolutely pancaked. So I hope people were paying attention with that. I said I thought we would have a test up over the highs. We did, but now it came down. You're sort of at the range low. I don't see this thing getting crazy bearish until you would lose a 50 MA. If we were to lose a 50 MA, this could rotate really, and I'm using really as my range low, basically 800. So if you lose the 50 MA, I think you could hold it for at least a test of trend, which is around 810 and maybe as low as the 100 MA, which is roughly 800. At this point, I don't want to mess with Amazon. Oh boy, an old troll just had to get blocked. Anyway, so let me just deal that again. Block this user. Anyway, we need to get back up over the new look above and fail high. Yeah, I know, totally. I've blocked this guy so many times. He always seems to create new accounts on Twitter and on here. It's really ridiculous. At this point, I either want to buy Amazon lower, play it short if there is a break of this recent range low, which is 837.75, 839.05, that area. Basically, any break that sustains below the 50 MA, I think could see 800. If we get back up over the all-time high of 862.80, I think that it will be kind of go time. It's weird with Amazon. You had those tails, and it's been trying to like go a few times, but it keeps getting held back. I think really just by overall market weakness. In general, I'm actually really kind of bullish on Amazon. I think that they are taking so much share. All the pain you read about in the retailers, it's mostly business going to Amazon at this point. So that's my view on Amazon. I'll show you how cool it is. Here's a quick demonstration. Alexa, turn on the living room light. Is it going to go? Alexa, turn on the living room light. There you go. Went on. It's pretty cool. I've been playing around with this thing. Alexa, turn off the living room light.
Okay.
How could you not love this? You can order things on there, and they make the new program super, super cheap. That to me is amazing. They have the dots now for even as cheap as like $50, and I think that they are now taking share early and establishing a beachhead in kind of smart homes well ahead of Apple. They're now on their second generation device, and I think it's an amazing thing for them. I think it's going to they're building their own ecosystem around their business, and it's not even so much around the actual physical technology. It's around using them and the convenience of using them for ordering. So ordering product. So I'll tell you, just as a user, I find myself ordering more and more stuff. I have the app on my phone. I could be out at a bar, at a restaurant, at another store. I go and I give this example. I was in a local business around here. I went in to buy shoes, and then before I bought them, I looked on Amazon. They were $20 cheaper. Before I even left the store, the shoes were on order on their way from Amazon. Amazon Prime, in my view, is the new Sam's Club. For those of you who know, that's like kind of the equivalent of Amazon Prime for Walmart, which is crazy enough. I once did a project for one of my accounting classes back in the day, and I remember I was talking to one of my professors about it, and it seemed like almost a quarter of the country, and I thought the number was incorrect, but it was correct. Almost a quarter of the country's population were members of Sam's Club. Imagine what will happen when that happens with Amazon, and my prediction is it will. So that's the scoop with that. I wish it would have a bigger correction to pull back. It's really hard to chase at these levels, but they are at the vanguard of a secular trend, and they're not going to be easy to catch. Here's why. Look at the competition. There is really no online competition for them. You have very niche players, and Amazon could buy them like they buy a pack of chewing gum. No pun intended. But the ability for a competitor at this point, and maybe Google can do it, they are so many years behind. And think about this. Do you really think that a business, and oddly, they're going to kind of have to face either the razor blades all at once or the swords all at once? What company is going to be able to endure quarter after quarter after quarter after quarter of losses to catch up to Amazon? it's going to be very, very hard. I think it was just sort of let to go too long, and now they're going to be very hard to catch up to. So I am a big-time bull on Amazon, but on pullbacks. Technically here, it had a look above and fail, so it should technically go lower. Maybe we will get our pullback. Maybe we get a big summer pullback. Put together your list. Amazon, to me, would be really one of the stocks at the top of the list. Another one that I'm a big fan of is this PayPal. I've talked about this a few times in stocks where I see the ability to look into the price action of how a stock is trading and tell when it's under accumulation. Oddly enough, and this will be shown in the weekend video, it keeps stalling on the progression line that I have drawn in here for this stock, which is interesting, but I am a big buyer of stocks on dips. I think 40 should be the new floor for this. So I've been finding what's easier than actually owning shares, and I've been doing this now for a couple of years. I've taken some heat on it, but they've all been winners, and I'll keep doing it until it doesn't work, is on dips, sell puts, sell out of the money puts below 40 strikes if possible. I think that area should really hold it. So that's the scoop with PayPal. And if you're looking to speculate on a company that could be a takeout candidate, I think PayPal is right there. I think that new thing, Venmo, is a thing. I know a ton of people use it. That was a great pickup for them, and I do think that all these, there was an analyst out the other day that was skeptical on PayPal because Google is trying to compete. Google has done such a crappy job on mobile payments. You go into places, and I do this all the time. I ask store clerks. They always say a lot of people use Apple Pay more and more. They don't say a lot, but they say it's been increasing. And I ask them about the Google Pay, and they're like, once in a while. They rarely see it. They are not doing well, and to me, a PayPal would be an amazing pickup for a Google, and maybe that'll happen. I think Apple also would behoove themselves to take PayPal out. I think that would be an amazing, or Microsoft or one of these big tech companies that kind of need to burst into that scene and do it in a big way. Maybe even Alibaba, right? Wouldn't that be something? Although I don't know how those hearings would go. Chinese company buying an American payment company? That would be something. Maybe the Russians, right? Alibaba, this stock is just a total mess. It's it's just up and down, up and down. As long as it holds the 20 MA, I'm cool with being long. Really between the 20 and 50 is okay. I mean, the other day I was looking to sell some puts on this thing, but it took off kind of ahead of me. So you really need to on days that you're worried about buying it, buy it, and then on days you want to buy it, sell it. That's it's like a Costanza play, do the opposite with Alibaba. But as long as it's above 103.19, it's kind of okay. I mean, I wouldn't really get too worried about this unless you start really losing the 20 and then the 50 MA, depending on your trade location. Someone asked about Lulu, not one I look at. Oddly, a couple of years ago, I was interviewed on on Benzinga. I don't do that show anymore because they seem to refuse to put my Twitter handle on the page, and that bothers me, to say the least. So if they want to get me back on the show, start showing my Twitter handle, and then we'll be all good. But I made a prediction, and they published a thing, and I had said I thought Lululemon was one of my stocks of the year, and it wound up really being. I've never looked back, and I talked about it in real time if you go back on my stream about selling it. This was a gap down that went and then retested into the gap and is now pulling back. It's actually in a down channel. I think that I would get interested in buying this at the gap fill around the kind of an old reference low, which became a consolidation high down at 59. What I would probably do there is sell out of the money puts. The channel low, if it were to happen now, is basically mid-range at 57. So somewhere between 57s and 59s, I'd be looking to sell out of the money puts. I think that it would have come down enough and spent enough time kind of in the wilderness that I'd be a buyer of that stock, or really a put seller. Someone asked about Silver Wheaton. This looks okay. As long as it holds the 50 MA, I'm okay with it. I like it. Kind of has a bit of a kicker pattern. You have the big candle up, a few days of consolidation, and now back through it. So 50 MA plus, muy bueno. Below there, no comprendo. So 2063 plus, basically 2063 to 2086 must hold. I'm short silver puts as a long proxy. I had taken profits and now re-added opportunistically. That's been going well. Also, another one kind of needs to hold the 100 MA. 50 and 100 MA I'd be interested in. I did kind of the same little game in GDX. Everyone likes to play their little games. We could play ours. Another great movie reference, Senator Geary. Held the 61A to the range down at 21s. It actually had a look below and fail. I was a little nervous about that because I was short puts, but it was okay. It now seems to be struggling at the 50 MA. Really needs to clear that 50 MA and the downtrend line for more. I like, though, that we're kind of getting closer to the downtrend line with multiple touches, with less amplitude of moves lower and increased frequency of touching to get a little siny, cosiny with you here. I like that, but the 200 MA has been very tough to get over. I need to see it clear the 50. I need to see it hold the 100, and then I need to see it clear the 200 for me to add. But I will keep those short puts on as long as that bad boy holds the 100 MA. Below it, I might not. So that's GDX. I covered Silver Wheaton. This was a case of a stock that didn't obey me right away. It actually did, and then it didn't. It did before it didn't. I voted for it before I didn't. Anyway, this was the curious case of AMD. It had that gap up into what I was drawing as the head and shoulders pattern. It's still very plausible here, but it's not cooperating so easily. So how to play this stock? There are two setups that I see. You had a very strong reversal bar on 320, and you basically have a double low there with today's rally. If you take out those two-day lows, I would short the stock again. If you can get back up above the gap day high of the 1468, the head and shoulders pattern, in my view, will have failed. It will retest the head and probably go higher. So head and shoulders patterns are very powerful. Failed head and shoulders patterns are also super powerful. Keep that in mind. Because sometimes think about what should happen and what does happen, and when things that should happen don't happen, they go the opposite way in a big way. So I either want to short below that low, I may enter that trade in actually after this, or a move up over that high. If you wanted to take the initial move, and you don't want to wait, if you don't want to wait to 1468, you could just do it over 14.5. I think it'll 6 of one, half a dozen of the other. It'll be that same thing. Anyway, we're getting a little long in the tooth here. And we should have some resolution, I think, tomorrow. If the market moves up over today's high tomorrow, we probably will have more rally. If we move below the low tomorrow, we will have more downside. With regard to, let's just button it up on SPY quickly. I realize we didn't really discuss that to my satisfaction. I said I thought we'd see a 50 MA. My problem now is that today's low was close enough to the 50 MA that I don't know if it will hold if it were to break again, because we got close. The ideal scenario today actually would have been a gap down to the 50 MA, or yesterday to have gotten real sloppy into the close and then hit the 50 MA. So what are my downside targets? The 50 MA needs to hold. If we lose the 50, I think we're going to retest the breakout point of 228.34 to 229.71. Somewhere around there, and it would be great if it coincided with the 100 MA. I don't think the bears will be able to get it through the 100 MA with conviction anyway on the first go around. I would be a buyer down near the 100 MA and that breakout confluence. If we get, like I said, if we get above today's high tomorrow on good news with the healthcare bill, or even on bad news, or whatever, it doesn't matter. The news is irrelevant. If we get above that, then I think we're going to go higher. And I'll tell you this, if the bulls can take back 100% of that down candle above 237.61, this market is probably going to rip a hell of a lot higher for the blow-off scenario, because it would have been a false breakdown and really a very weak retest of a move down. I think it was enough, though, to run stops and to suck in shorts where it could fuel a move back still higher. So I either like above today's high long or below the low short, with the caveat that the 50 MA is right there, and that really does need to break for a move down to the 100, which I do think would happen in short order if the 50 MA is lost. Say that 10 times fast. Anyhow, that's my story. I'm sticking to it. If you want to watch this again, you came to it late, it will be rebroadcast after it does the buffering or whatever that magic is that it does. But it will be on my YouTube channel, which is Justin Pulitzer Trades. If you're not following me on Twitter, I don't know how the hell you found me on YouTube, but my handle is @JustinPulitzer. Please follow there. And I will do the weekend review video on Sunday, and so show some of these charts that I have now fully teased you about. Have a great rest of our week, and cheers.